What is up, guys? My name is Hassan and welcome back to another dividend investing hashtag good investing. When we talk about good investment, what do we mean? We're talking about companies with little to no debt on their balance sheet. So today I'm going to give you guys a stock analysis on Johnson & Johnson, ticker symbol JNJ. Those of you guys who celebrated Eid Mubarak to you guys, from me to you guys and your family. As always, before we begin, I have to give you guys a quick disclaimer, and the disclaimer is that I'm not a financial advisor, nor do I know you personally or your financial situation. I'm not responsible for any of your gains or losses in the stock market. My suggestions are only suggestions. That does not mean you go out and buy these stocks that I'm going to recommend. Also, I'm not a scholar who is here to certify if a company is halal or haram. It is just a place for you to start your own due diligence, and make sure you guys check out the disclaimer in the description below. Another thing, that we should not randomly follow people on YouTube and their suggestions. You should make sure you always do your own research. Like, for example, say I recommend the company Johnson & Johnson, and then a few months down the line I decide to sell this company. Does that mean you should sell that company? No. So it's always really important that you guys do your own due diligence. Another thing about my disclaimer, all the information that you guys see here are not mine. I get them from other people, a lot of research, magazines, books, articles, 10K, 10Q, and so on. The only thing that might be mine is maybe my emotions and my experience. And it's really important that you hold yourself accountable, because it is your own hard-earned money that is being invested. So this is my $19,300 Robinhood portfolio, which you guys can see right here. And this is my 11th year investing in the stock market. I just want to show you guys how I've been doing for the last few months, so that way I'm transparent with you guys and clear. So one day I'm up about $134, and then if we take a look at 1 week, I'm up about $59, and then for 1 month we're up about $200 or 1%. And then if we look at 3 months, and we have been experiencing this downturn, for the last 3 months I'm up about $817 or 4.4%. And then we look at the year, for the year I'm up only about 2%. But another thing to keep in mind is that this dip that you guys see, it was an awesome buying opportunity. As it was going down and down, I was buying and loading up my shares. As it continues to go up, I'm continuing to buy. And relatively here, for the most part of the time, for the most of the year, I was relatively flat. But every time it dipped, I buy more, and as the months go on, I collected my monthly dividend. On the right here, you guys can see some of my top holdings, such as AMD, Baozong, Waste Management, Texas, PBA, 3M, and then we can see here, if we scroll down, Johnson & Johnson. So I have today we're going to do a stock analysis on Johnson & Johnson. I have about 7 shares, or 7.17 shares. Here, the reason why you see 0.17, it means it's fractional share. So for the most part, I have 7 shares invested in Johnson & Johnson. I'm not a person who only talk about investing. I actually do it, which you guys can see right here. So now we're going to go to Seeking Alpha to give you guys a quick overview what Johnson & Johnson is about. A lot of us already know Johnson & Johnson. We experience it. We use their products and their services. So I'm going to give you guys a quick, currently it's at 148. So Johnson & Johnson researches and develops and sells various health products, and it operates through 3 segments. So this is really important. They operate through 3 segments. Consumers is the products that we use, pharmaceuticals, and medical device. So this shows that Johnson & Johnson is very well diversified. They don't rely only on their consumer products. So some of their consumer products that we use every day, I'm going to show you guys that. So these are some of their consumer products that we use all the time. We have Tylenol, Band-Aid, Motrin, Aveeno. We have Johnson & Johnson, Zentrex, and then so on. They have other products. These are some of it. They also have Listerine. So Johnson & Johnson, currently people are willing to pay $148 for it. So they're currently at 148. Their PE is around 23, which is relatively, I consider, high or overvalued, but Johnson & Johnson is a great company. That's why we have to pay a little bit at a premium. Another thing I want to look at is their market cap. So currently, the Johnson & Johnson's market cap is around 392. So one of the first things I like to look at is how much is the company worth. If I were to buy this whole company all at once, I would have to pay $392 billion for this company. Another thing I want to point out about this PE, the PE is currently at 23, which is relatively high. So there's a famous quote by Warren Buffett. He says that it is far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So meaning that we should always, it's okay if we pay a little bit premium for a wonderful company, because in the long run, it will do way better than buying a cheaper company that is not so wonderful. For me, investing is very simple and easy. I have a very specific strategy, which I'm going to show you guys now. So if we scroll down to the bottom of Yahoo Finance, we see the financials, their revenues and earnings. So in 2017, they were earning around almost $72 billion in revenue. And if we look at 2019, they're almost earning about $82 billion in revenue. So we can see clearly from this graph that their revenue is increasing year after year. And this is what we want to look for when we're researching companies, where the company is increasing their revenues constantly. Now let's look at their income statement of Johnson & Johnson. So this is their income statement. We can see that from 2016 to 2019, or even to trailing 12 months, we can see that for the most part, their revenue is increasing year after year. So another thing I want to look at is their profits. Just because their earnings is increasing, is their profits also increasing or not? So in 2016, their profits was around 50 billion. In the last 12 months or 2019, they're at almost 54 or 55 billion. So for the most part, their revenue or their gross profit is increasing year after year. As a Muslim investor, we have to take a look at their interest payment. This is the problematic part because they pay interest. As the individual, I don't like to pay any interest because it shows that I'm not a well-managed person or person who's able to finance or manage their financial situation. So I don't like to invest in any company that pays interest. So here we can see that the interest expense is for the last year was around 241,000 and if we or 241 million. So we're going to go by the 5% rule. So we're going to see of their gross profit. So currently for the last trailing 12 months, their gross profit was around 54 billion. See if it meets, if their interest payment is less than 5% of their gross profit. So we're going to pull out our calculator. We just make it simple. 241 divided by 54726. We get 0.004. We're going to time this by 100 and it's 0.44, and we're just going to round this. We're just going to round this to 0.4. Currently, Johnson & Johnson is paying 0.4% of their gross profit in interest payment. In other words, this is less than 5%. It's actually even less than 1%. And this shows that the company is healthy. But as in terms of a Muslim investor, we should stay away, or we shouldn't invest in anything that has any interest. It should be zero. So I have a lot of companies in my portfolio that pay 0% in interest payment. So when you guys get a chance, check those out. On a positive note, if we look at for the last 3 years or 36 months, we can see that their interest payment is decreasing for the last 2 years. Hopefully this continues on and eventually they pay zero in interest expense. So now I want to show you guys why I think Johnson & Johnson is a solid company, because we're going to compare it with the S&P 500. Here we have S&P 500 performance, which is in blue from 1980, and this data goes up to 2012, and the red is Johnson & Johnson. We can see that in the last 30 years or so, we can see Johnson & Johnson has outperformed S&P 500 by a large margin. Since 1980, shares have returned an average of almost 15% a year compared to 11% for the S&P 500. So some people might say, oh, this is a little bit old data, but for the most part, this is beating the S&P 500. So I want to show you guys a little bit more recent data, which goes up to around 2015 or 2016. So this chart shows us 30 years of more than doubling the market. So we can see Johnson & Johnson which is in blue, which is on top, was way outperforming, or more than double, 4.1% increase versus 1.5. So here, Johnson & Johnson is outperforming the market twice the amount. Now I want to take you guys, so we can see here in their balance sheet, for the most part, every year they're acquiring more and more asset, which is a positive sign. And this asset, or this total asset, it consists of their cash amount. So here I want to look at now is their current liability. So their current liability is at $45 billion. Now I want to look at their current ratio. Their current asset is around 45 billion, and if we look at their liabilities that they have to pay in the next 12 months is at 35 billion. So we're going to pull out our calculator and figure out what is their current ratio. So if we do 45 billion divided by 35 billion, we get 1.2 billion, or 1.2 times. The current ratio is at 1.2 times. So this tells me that Johnson & Johnson has 1.2 times more asset than their current liabilities that the company has. This shows that the company is very healthy. Like, moving forward, they're not going to have any bankruptcy issue. The balance sheet is healthy. Next thing I want to do is we want to go over to Seeking Alpha. Now I want to show you guys their profitability. If we look at their Johnson & Johnson here, their gross profit margin, which pretty much is calculated by subtracting the cost of goods from their total revenue. So currently their gross profit margin is at 66%. According to Seeking Alpha, they give it a B, which is decent. But if we compare it to its sector, it's around 55%. So currently the Johnson & Johnson profit margin is higher than their average sector, which is a very positive sign. So let's take a look at their dividends. This is their dividend scorecard. So currently Johnson & Johnson pays around 2.7% in their dividend yield, which pays out around $4.04 annually, and their payout ratio is 52%. In other words, this is their health bar. We don't want it to be too close to 100%, but we don't want to be too little that they're hardly paying out to their shareholders. So currently their payout ratio is 52%, and their 5-year growth rate, is around 6.3%. So this means that on average, every year for the last 5 years in a row, they have increased their dividend for 6.3% year after year, and their dividend growth rate is around 57%. So they have increased their dividend for 52 consecutive years. So guys, if you guys made it this far in the video, please make sure you guys hit the like button, hit the subscribe button. It helps my channel grow and reach out to more people and help out more people, because at the end of the day, we're all on the same team in terms of investing. Another thing that I want to point out is that they pay quarterly. That means that every 3 months we get paid as an investor. So the next thing I want to show you guys is their dividend yield. So their 4-year average dividend yield is at 2.67%, and their current dividend yield is at 2.7%. So this shows for the most part their average dividend yield is around 2.6. So we're actually getting a higher value. So this shows based on the dividend yield, it is actually a bargain. The dividend yield is higher than the 4-year average. It's not much. So we're technically getting 2% higher dividend yield than normally. It's not much, but it still shows that even at this price, at $148, I would buy this company, or this is a good buy, because you can't go wrong buying Johnson & Johnson. In the long run, is going to do really well. Another thing I want to point out is their dividend history. So if we look at their dividend history from 1990 all the way to 2020, this has a nice increasing dividend yield. So their dividend has been growing constantly year after year. So another thing I want to point out here to you guys is that during 2008, 2009, during the recession, what did the company do? Did they cut their dividend, or they continue to pay, or did they stay strong and continue to grow their company? So we can see during 2009 and 2010, they continue to increase their dividend and they continue to do well. Even during this coronavirus, they're increasing their dividend. This shows that this is a very strong, solid company, and you can't go wrong buying this company. And that's why I'm an investor of Johnson & Johnson. Besides, my only issue with Johnson & Johnson is that they're paying 0.4% in interest of their gross. Normally, it should be 0. Guys, if you guys made it this far, like the video, hit the subscribe button. As always, thank you. See you next time.